Hi, this is Lara at Elliott Wave Stock Market with a DJIA Elliott Wave analysis for you for the New York trading session dated Tuesday, 21st of September. Quick look at a historical chart just to put my wave count in context. This is going back to the early 70s. I'm pretty happy with seeing a long, sustained rise and calling it an end of a fifth wave at cycle degree up here in January 2000. Thereafter, we've got a correction down for A, corrective structure up for B, which is 154% correction of A, and now we're working on a cycle degree wave C to the downside. So this is an expanded flat correction which began here. The most common relationship between A and C within an expanded flat is for C to reach 1.618 the length of A. But in this instance, because wave B is quite a long correction of A, it's still entirely within allowable limits for an expanded flat and fairly common as well. We can therefore expect wave C to reach 2.618 the length of A, which would take the Dow down to 2,278 points in a bit. And that may happen around about October 2015. That's where the C wave will have taken Fibonacci 8 years. Wave B took a Fibonacci 5 years, and wave A lasted a Fibonacci 3 years. So that's entirely reasonable that wave C could take 8 years. Taking you now to a daily chart, just for the last little while, where this maroon 2 up here and the start of primary wave 3 is this maroon 2 up here, and I have this start of primary wave 3 within a cycle degree wave C. We have a 5 waves down for a blue or minor 1. There are no adequate Fibonacci ratios within this downwards wave between pink 1, 3 and 5, within pink 3 and within pink 5. Within wave 4 pink, wave C orange is 58 points longer than 1.618 the length of A. That's the best Fibonacci ratio I can find in this whole downwards movement. So from that perspective, it really isn't that good a wave count. But it certainly does fit, all of the subdivisions fit quite nicely. Thereafter, for the second wave at blue degree, we've got a leading contracting diagonal for wave A pink, where waves 2 and 4 have to subdivide into zigzags, and they certainly do. I'm pretty happy with seeing this as a 3-wave movement. Thereafter, we've got what could only be a 5-wave movement to the upside for a C wave to end the second wave. This target to the upside, 10,965, is where wave 3 green and wave 5 green within this C wave would reach equality. And because 3 is shorter than 1, and it's 38 pips longer than 0.618, the length of 1, so there's a reasonable Fibonacci ratio between those two. Therefore, wave 5 cannot exceed wave 3 in length, because 3 can't be the shortest. So the upper end of this target is also a maximum allowable upwards limit for upwards movement for this wave count if this labelling here is to remain correct, and I wouldn't want to put that up any higher. Taking you now to an hourly chart where this green 3 and 4 is this green 3 and 4. This is a 4-hourly chart, and this is all of pink C to the upside. Within wave 1 green, wave 3 orange has no Fibonacci ratio to wave 1, but wave 5 orange is 35 points longer than 0.618 the length of 3, so there is some reasonable Fibonacci ratio there. Within wave 3 green to the upside, wave 3 orange is 25 points longer than 1.618 the length of wave 1, so there's a reasonable Fibonacci ratio there. Wave 5 orange is 11 points short of equality with 3. Thereafter, within this fifth wave and the last wave to end this C wave and to end this whole correction, wave 3 orange is 21 points longer than 2.618 the length of this short wave 1. If wave 5 orange reaches equality with 3, and it's already easily past equality with 1, if it reaches equality with 3, our target is 10,884, so that's the lower end of our target range, with the upper end being a limit. Here's an hourly chart, and this is just detailing the last little piece of movement, and since I did this chart we had some good strong downwards movement, so wave 2's moved lower, any further downwards movement, if it moves below 10,703 points, we have to seriously consider the possibility that upwards movement may very well be over. We're getting towards the end of this fifth wave at orange degree, within a fifth wave at green degree, within a terminal C wave to end this whole corrective pattern. So we're getting really close to a high. So taking you back to the daily chart, rather than trying to pick a high and expecting it's likely to end somewhere in or very close to this target zone, I want to see a full daily bar opening and closing below the lower edge of this little parallel trend channel before I finally confirm that we have the high in place and upwards movement is over. We've got increasing divergence with MACD trending down to flat and price very slowly trending back upwards. So as long as that divergence remains and this wave count remains towards the end of it, we're really only going to have confirmation of this high being in place when we have the trend channel breached. This little channel is Elliott's channeling technique, so I'll place quite a lot of weight on it because it works fairly well. So this daily bar here is the 57th trading day since the start of the second wave at blue degree. If this wave at blue or minor degree is to have a Fibonacci time relationship, we have to have this last bar must be the last day allowable for upwards movement. We could allow 55 plus 2 to allow that wave 2 blue may have a Fibonacci time ratio, but any longer than that and it's too far off to say that it has that kind of relationship. So if it's not over already, it's fairly likely that it could be over pretty soon, but I'm not going to call a high in place until I see that trend channel clearly breached to the downside. That will be some reasonable confirmation, and a little bit of patience waiting another 2 or 3 days for that would give me more confidence in calling that trend change. That's all for me with your Dow analysis, and I hope everyone else is having a fabulous day.